Hello everyone. In this video, I'd like to discuss with you a tool called the stochastic oscillator. I use this indicator very often in my work. So let's take a look at what this indicator is, how to set it up, and how to work with it. You can set it up in the indicators menu. We select stochastic oscillator and we see an indicator like this. To configure it, click on the pencil icon. Set the key period to 5. Everything else remains unchanged except for the bottom field, moving average. You need to select AMA for it. For styles, choose 2 pixels. Set the key period to green, and for the D period, set it to red. Save the settings. Now we see this kind of indicator. The stochastic is an indicator that shows the position of the current price relative to its previous highs and lows. It consists of 2 periods, the green key line and the slower D line. This indicator helps us identify moments when an asset may be overbought or oversold. Let me show you a detailed example, my dear friends. For instance, let's consider the currency pair of the British pound against the Australian dollar. Here, we can clearly observe how the significant green key line precisely crosses over the crucial D line. This is a very important point to note. We are below the 20 line, and in this case, I would gladly consider a buy trade here. Also, my dear friends, please do note that we are indeed hitting a significant support line right here, and most likely the price will now move in an upward direction from this point. We will go over this in the following trades. So in this way, the indicator always works, but it is preferable to support it with other indicators such as MACD, RSI, and so on. This is regarding the position from bottom to top. That is, here you can confidently take a buy position. I will show you this important aspect in the next upcoming trades. And this is also consistently true for all trades when, for example, pay close attention, my dear friends, when we clearly see that the key period line precisely crosses the D period line from its top position to its bottom position. This means that in this case we are ready to consider a sell position. That's how it works. And now, friends, let's move on to real trades and trade currency pairs. On our screen we have the British pound to Australian dollar pair, an OTC over-the-counter market, and we can see a pretty good situation. Let me show it to you. In this particular case, we can clearly observe how the key period indicator precisely crosses over the prominent red D period line. We also distinctly see that we are currently positioned above the 80 line, indicating a significant level. And we can also see that the asset was heavily overbought, meaning there was an upward impulse. And in this case, I am happy to open a sell trade. Let's go for a sell. $150, 1 minute time frame, expiration time, and we've entered a sell position. Let's carefully look at other potential trades, other valuable assets, where we can also effectively take a very similar and advantageous position. In other words, we're not interested in weak trades, that is borderline cases. Here's a good situation. Here, as we can see, everything is similar. We clearly see how the important key line decisively crosses the D line. Furthermore, we are also currently positioned below the lower range of the indicator. And in this case, I open a buy trade. The expiration is 1 minute and we've entered a buy position. Now, let's look for some more interesting trades. Alright, CAD JPY. Let's go back to the first trade, British pound. Our trade is closing. It was a sell position. Plus $288. Great job. Let's look at some more trades. CAD JPY. A similar situation. The key line crosses the D line at the lower boundary. Here, I'm happy to take a buy for $150. Expiration is 1 minute and we're in a buy position. Let's see how this turns out. Not a bad situation here. I'll also enter a buy position. As we can see, the key indicator will soon be leaving the oversold zone. So, the second trade unfortunately closes at a loss. That's normal, it happens, that's trading. It's impossible to always trade and profit here. So we don't get upset or sad, we just keep trading calmly. So our first trade was a win, the second a loss. The third trade, we opened it for an increase. And the fourth trade, let's see how it closes. Here we took a long position, that is an upward position. And we see that the trade closes with a profit of $282. Let's take a look at the third, fourth trade. We also close it in profit. And my friends, we can clearly see that out of 4 trades, we successfully closed 3 in significant profit using this particular indicator. However, just in case, I would strongly recommend that you always use additional complementary indicators such as the well-known MACD, the popular RSI, and so on. That is to say, you can effectively use the rate of change in combination with the stochastic oscillator. So friends, use several indicators at the same time. Also, let me remind you that in my Telegram channel you will find tips, indicator settings, and lots of useful information. I'll leave the link in the description. Please check it out. Have a great day, everyone. Thank you very much for watching. See you in the next video. Thank you. Bye.